Good morning. So you just lowered your price target after this earnings, but you kept an overweight rating. Explain the rationale there, lowering the price target but keeping the rating.
Yeah, no, good morning, and thanks for having me. Great to be here. Listen, quoting, Elliot Hill himself, this is not a turnaround that's linear, by any means. They never are, especially in a competitive consumer space, and especially in this athletic space, which is an extremely competitive marketplace. And it is taking a little bit longer, but, taking a step back, he's been in this seat for just a little bit over a year. And are they doing the right things to fix the business? We think yes. So for patient investors, we do think Nike is still a good stock as we look into 26. But having said that, it is taking a little bit longer, and I think patience is required.
All right. Looking at the North America business, that's moving to the upside. It grew year over year. We spent a lot of time talking about how Hoka and On are kind of taking market share from them. That strength in the U.S. business, does that dismiss that narrative, or is that still really a real threat?
I think that still makes some of the other brands, in the space and the pace of the share gains, continuing over the next, let's call it, 12 to 18 months, a question. We think, especially Hoka is at risk, as Nike has been successful going back into the run specialty channel, and Hoka's market share in that channel specifically, is quite high and has been coming back. We think with On, it's a different consumer, a different price point, different silhouette altogether. So we don't really see On that much at risk. But yes, you're right. North America has been a bright spot for the business, especially in wholesale. DTC is a little bit more tricky in North America. They're lapping pretty significantly promotional business from last year, so you're seeing some declines in that. But they talked about in wholesale, existing partners seeing strength, importantly new partners as well. Nike entered some new distribution in the last couple of quarters, and some of the family channel as well as Amazon, and they had some pretty good things to say about that. So we think that's all moving in the right direction.
All right. No, it's not great. The China business down 17%, 6 straight quarters of declines. What exactly is going on there? Is that local champions taking market share from Nike? Is it an anti-American sentiment? Do they just not have the products that are exciting people? Because we're seeing such a divergence from the North American business and the Chinese business.
Yeah, no, exactly. I think you said it, and it's really a combination of things. On the call last night, they talked about that the brand has become, too promotional in the region. They have not had enough newness. Inventory situation is still pretty elevated, and they are limited how quickly they can take markdowns. And in the own channel in China in DTC, Nike is seeing some relative, less bad, but it's really the wholesale channel that's been pretty challenged. They talked about, 5,000 partners that they have in wholesale in China. So as you can imagine, that's a pretty difficult, task to turn around. So again, that's going to take some time. They said for the out quarter, expect China to be similar. So China's basically, we're modeling, down mid to high this next quarter as well as the quarter after.
All right, got to ask you about the tariff question. The company's saying it's taken a $1.5 billion hit from tariffs just from Southeast Asia, where obviously they source a lot of their sneakers and things are made there. It doesn't seem realistic for them to move that production anytime soon. How do you view tariffs in this company? Is there any way for them to mitigate it? I mean, as an investor, isn't that just a huge impact to profitability, supply chain, everything else? I mean, how does this company get around that?
Yeah, so on tariffs, they're really in the same boat as, everybody else. The 1.5 billion, that's a gross number. Last night, they talked about guidance for fiscal 3Q, and they said about 350 basis points to gross margins. That's a gross number as well. We're thinking the net number for the year, which is a little bit less bad, that's about 120 basis points. I mean, listen, they're offsets. This is a company, obviously, at scale. They are working with their partners like everybody else. They are taking price, very selectively, but some of the more premium product, they've been able to pass through price increases. But of course, with that, they're being careful. But, overall, they're in the same boat as everybody else in the space.
So it doesn't sound like there's any near-term answer. They're just going to have to kind of absorb it and I guess when they can pass the price along.
Exactly, exactly. That's, that's been the playbook of everybody in the space as well. I mean, of course, all the footwear manufacturing is very levered to Vietnam, and, companies have been able to diversify to an extent, including Nike. But the bigger story has been
Okay.
negotiating with partners.